Hey everyone, this is Adam Levine, your brokerage director here at Back 9, and today we're going to talk about permanent life insurance.
You can't talk about permanent insurance without talking about term insurance. So let's go over that real quick. Term insurance is for a term of time, typically 10, 20, or 30 years. It is temporary coverage, as it will expire or renew, lower premiums, higher death benefits. It's like renting life insurance, and term insurance will typically convert to permanent insurance as well. Permanent insurance, on the other hand, has no time limit. It's built to last as long as you do. It's like owning life insurance, and you build a form of equity called cash value, which we access through tax advantage distributions. Permanent life insurance is an asset.
So, what do we mean by asset or asset class? We're talking about a policy's internal rate of return. So, in other words, if you put in $1 and get $2 in death benefit, now it's an asset because you're getting more than you put in. So, that becomes the discussion on which policy is best, which delivers the best internal rate of return.
So, what is cash value anyway? It's a form of equity that grows tax deferred. The increases are based off of market performance, or the general account for the insurance company, or even a fixed interest rate. And the way we access this cash value is typically through loans or withdrawals. Why? Because of the tax advantage. There's no taxes on loans, and withdrawal is just a return of your basis. It's giving you your money back. We use this a lot of times for retirement planning, emergencies, college planning, or even business planning. Whatever you want, it's your money. When you take a loan out, no one's going to ask you what you're doing with it. Of note, too, is the IRC codes. 7702 tells us how we can take money out of a cash value policy. 101A and 101G have more to do with the death benefit as well as chronic illness, and then all the way to 642C, which defines how we use life insurance for charitable organizations. Now, we can change these into new policies. One of the benefits of permanent life insurance is you can move the value from one policy to another through a 1035 tax-free exchange. What we're really looking for here, though, is to avoid a MEC, a modified endowment contract. Now, this is only going to apply if you're planning on taking money out of the policy, but in order to avoid a MEC, we have to go by a couple of tests: the cash value accumulation test and the guideline premium test, or we'll lose all those tax benefits. So let's talk about the different kinds of permanent life insurance, starting with whole life. Whole life is probably the oldest form of permanent life insurance. So why would we choose whole life? Well, for one, it's the guaranteed death benefit and guaranteed cash value. It's ideal for long-term planning, leaving a legacy, final expenses, and even asset protection. There's two kinds of whole life. You have participating whole life, and you have non-participating whole life. Participating whole life is issued by mutual companies. You receive a dividend based off of the insurance company's general account performance, and dividends can be taken as cash, applied to reduce premiums, left to accumulate with interest, or used to buy more insurance, which is called paid-up additions. Non-participating whole life does not have a dividend. However, it does have a fixed declared rate of interest, which gives it lower internal costs, and it's more predictable. Fixed premiums and guaranteed benefits. Now let's talk about GUL, or Guaranteed Universal Life, also known as permanent term. It's ideal for estate planning, business succession planning, charitable giving, or even for those clients who just want guaranteed coverage without any volatility. GUL combines term-like simplicity with lifetime guarantees. So what that means, instead of the term being 10, 20, or 30 years, the term is your lifetime, or to age 120. Premiums are fixed, but must be paid on time to maintain that guarantee. There's no focus on cash value. It's all about the death benefit. although some policies will have some cash value or a return of premium option. You'll find that GUL is the lowest cost guaranteed permanent policy when compared to whole life or other ULs that have cash value. Now, the downside, however, is it is minimal to no policy flexibility once it's issued. It's set it and forget it. Now let's talk about index UL and variable UL. An IUL has its cash value tied to an index, usually the S&P 500, but carriers offer many options these days. An IUL will have a floor and a cap, which means you can't go below zero. However, there's a roof on your growth. They do feature flexible premiums and death benefits, meaning we can pay more or pay less over time, as well as adjust the death benefit from increasing to level. Now, policy charges may impact performance. This is what a lot of agents tend to get wrong. If you end up borrowing a lot of money from your IUL in the form of loans, and the cost of insurance goes up, that could result in a negative consequence called a lapse. It's very important to keep your eyes on an IUL. Where I think a lot of agents get wrong too is there is no direct investment in the index. With an IUL, you are investing in the insurance company's general account, and the general account is going to Wall Street and purchasing options on that index. What you receive is essentially the returns on the options. Contrast that to VUL, or Variable Universal Life. The cash value is invested in mutual fund-like sub-accounts. There is no cap and there is no floor, so you are exposed to the market. So that gives you a high growth potential, but also a high risk that the market can drop. It requires a FINRA license in order to sell VUL, 6 and 63, and it's ideal for clients who have some investment experience and can tolerate risk. Now, both policies will offer tax-deferred growth, loans and withdrawals, flexible death benefits, and they are both for long-term planning.
As long as we're talking about what IULs are, let's also talk about what IULs are not. IULs are not infinite banking or be your own bank. Matter of fact, you can borrow too much from the policy and cause it to fail. IULs are not guaranteed either. Despite the underlying performance of the index, an IUL can still lapse, which happens most often due to poor structure by the originating agent.
That being said, let's talk about life insurance accumulation on a risk and reward scale. So picture the left side of the screen as the least amount of risk, but also the least amount of reward. And then on the right side of the screen is the most amount of risk, as well as the most amount of reward. As we can see here, GUL is on the left side of the screen. There's very little risk in a GUL. It is guaranteed. However, there's also very little reward. As we discussed earlier, GUL doesn't really have cash value. Then we'll see whole life. Whole life has very little risk because it is also guaranteed. However, there is not much reward as well. We can see on the right side of the screen Index Universal Life, which has a higher risk, but also a higher reward potential when compared to a whole life policy. And then all the way to the right, we have Variable Universal Life, which has the most risk, but also the most potential reward. Now let's talk about final expense life insurance. Small face, but big value. We'll typically find that final expense is best for seniors aged 50 to 85, clients who have health conditions, as well as clients who want peace of mind for their loved ones, knowing all their final expenses are taken care of, or any combination of these three. It's designed to cover your end-of-life expenses, such as your funeral or burial, or your medical bills. Face amounts range from $2,000 to $50,000, often simplified issue, meaning very few medical questions and no medical exam. Also available in a guaranteed issue that has no medical questions at all. And it is permanent coverage that will build very small cash value. The sales tip here is really to emphasize on the ease of approval and the emotional relief they'll feel knowing that their final expenses are taken care of and not a burden to their family. On to one of my favorite subjects, term conversions. So what's a term conversion? It's when you convert a term policy into a permanent policy without any medical underwriting. The client will retain their original health class. For example, you sign up somebody for a term policy when they're 30, 10, 15 years later, they receive a bad health diagnosis, and maybe they're not even insurable anymore. However, the saving grace is that you are able to convert that policy at the original health class, which may even be preferred. Usually, you do this after the first 2 years, up to the end of the term, or by age 70, which will vary by carrier. You can convert all or even part of the original death benefit, and Back9's quote and apply system will help identify eligible conversion options and even send you an indication when that policy is eligible to be converted. Here's a pro tip for you. The shorter the pay period, the lower the total cost. Here's a quick case study. 40-year-old male, standard non-smoker, GUL for simplicity. Here we have a $250,000 GUL. It's $165 a month, but this is a lifetime pay, so paying to age 100. Now, if he's 40 years old and paid to age 100, that's 60 years. He'd pay $118,000 in total premium, which still isn't that bad, right? You give me $118,000, I'll guarantee your family gets $250,000 no matter when you die, whether it's today, tomorrow, or 100 years from now. Now let's take the same example, but in a shorter pay period. $250,000 on a 20-year pay period is $282 a month, or about $3,400 a year, but it's only for 20 years. So now we cut our cost in half. For just $67,000, I can guarantee your family receives $250,000 no matter when you pass, whether it's today, tomorrow, or 100 years from now. So it's kind of like a credit card. Pay more early and you'll save a whole lot in the long run. Quote and Apply makes it super easy to run permanent insurance quotes. From the digital insurance market, you can simply click on Permanent Insurance, All Lifetime Options, or if you're in the quote screen, simply click on Lifetime, and then you will see your permanent options.
Well, thanks for joining me. I hope you learned something today. If you'd like access to Quote and Apply, go ahead and click the link in the description, and you can run permanent quotes today.